Bitcoin's put in its largest correction in over 120 days. It has dropped 15% from its peak. And so we're looking at signals for the last month as to how the insiders could be selling in amongst the ETF hype. And it looks like we might have the first signs of confirmation that the insiders have been selling their cryptocurrency during this period. But it's not all bad news. We just want to stay ahead of the masses. And if that's you, then you've made it to your home of macro cycle analysis. Hit that like and subscribe button right now. We've got heaps to cover. We've got plenty more information coming your way across the traditional markets that give us insights into what happens next in the markets. Remember, there are no guarantees, just probabilities, and that's what we want to work with in today's video. So let's kick it off with where Bitcoin sits now. Over the weekend, we had a small drop to the downside, and it has broken past the 50% level, that key level that we've been waiting for Bitcoin to show whether it's going to be strong or weak underneath that. And that was $42,200. As we open on Monday, it's trying to attempt that right now. But let's just look at the macro side of things and then drop it down to the small term timeframes. As I said, it's not all bad news. We do need corrections, and corrections are very fantastic. They're very healthy for the market because they are good re-entry points. People need to take profits. We don't want people holding on to their bags forever. And when people take profits, that resets the market and puts in another solid foundation for the market to move from. Now, we've been looking at this in terms of Wyckoff structures, Gann price levels, Gann timeframes, and it seems like things are working out relatively well. So I want to get into more of that in just a moment. Let's start with looking at where Bitcoin has just closed. There is the weekly bar underneath the 50% level on extremely high volume, as you can see down here. And that bar in itself is a major reversal bar here. So to the downside, we have a possibility of roughly $37,000, but the Bitcoin needs to break through the low first. That low's at roughly $40,000. Now, there can be multiple things that come up over the coming months. We have had 120 days up, and if you want me to do the maths, it's basically 4 months. So I'm not expecting the market to go on another massive run anytime soon. Maybe it has one final attempt at 49, maybe it gets to 50 or 52. And for these short-term traders, that is a fantastic thing for them, just like our traders in TIA Premium, which you can find a link to in the video description. Go and check that out. Essentially, these guys are learning how to trade the markets long and short and everything in between. We have the short-term timeframes, long-term timeframes across crypto. If they want to use it on stocks, anything that has a chart, that is the beauty about the analysis here. And so they're making some pretty significant gains all the way down to some smaller gains. Gains are gains at the end of the day, as long as you know how to stay safe in the market. The markets have been hyped up with this ETF news that has been going on for months. And now we're looking to a possible pause and correction in the market. And I know I've been talking about this since December, but when we're looking at something in a macro time frame, that's what happens. We need to be patient with the market as we were at the lows when Bitcoin was trading around $25,000 to $28,000. We were looking at that as being a possible bottom for that period before we were looking to break out. Now, I had no idea the market was going to be this strong heading out of that low, breaking through 28, breaking through some of the other key levels at 32,000, but here it is. It went on strong, long and strong, and we just followed the trend with the Gann swing indicator. Now, in terms of the macro mindset, the market psychology, we've been through a couple of these ranges now. We've had disbelief, more disbelief, and we had a couple of depressions as well. I wonder if this pullback, depending on where it goes, is going to be as depressive as the last couple. I don't think it'll be as depressive, but you can bet your bottom dollar that the bears will come out and tell us that the market needs to break down. It needs to come back and test 30 or 32,000. As the market continues to climb up, those lower targets for the bears will get higher and higher. Typically, each of those low targets will not get met. Think about that. They will not get met because the bears, or the extreme bears, are trying to target things that are way too low. Now, we've seen it across Twitter and YouTube and the media and all that sort of stuff. They will be looking for probably around at least 30, and possibly they'll try and say it's got to come back to $25,000. I don't think that's going to happen. So that's part of our good news to a possible correction. Now, within the correction, which potentially will last, if that is the top on the 11th, will potentially last 1 to 2 months, maybe slightly longer, which is okay. But I think it's going to be in the multi-weeks to couple of months at least. Then we can start to position ourselves for that next stage of the bull market, which I think is going to get pretty hot and heavy. Now, within this time frame of a potential pullback, we may even see the traditional markets, the S&P 500, the NASDAQ, pull back as well. We do have some other big pieces of fundamental news to get out of the way at the beginning of this year, especially because we have such a large consensus of the media and the masses and the analysts telling us that we are looking to see interest rate cuts this year. And so I've done a post here on X. If you want to follow, go and do that. Links are in the video description. I can update you there so much easier and quicker with the details of how the masses get it wrong over and over and over again. Now, we might not always get it right, but the aim, of course, is to be on the right side of the market more often than not. And from what you guys have seen, it has been pretty damn accurate for the last couple of years. Now, in this case here, just looking at the interest rates, whatever fundamental piece of info comes up or news headlines comes up, try to think like the opposite of that particular headline. And what I've got here is in terms of the interest rates. So I'm looking at the interest rates. The majority think it's going to be cut. 74% here, 73%, 50%. And obviously, as you go through the year, going down your months here, you can see that it gets less and less. But of course, as we get closer to that deadline, more will think that the interest rates might need to be cut. The point that I'm making here is when we get closer to those points, if we don't see an interest rate cut, that could be enough to upset the market and make it even be seen as a negative. Even though the market has been going up with interest rates at 5.25 to 5.5%, they might see this as a negative that the market is not cutting, or the Fed's not cutting rates at the timing that they want it to be cut. So just think about that. If we get to those dates and we don't see a cut and maybe the market just pauses for that period, that might be a negative. But what I think will happen if that's the case over this first half of 2024 is that potentially we will see the market head up again. There might be a bit of a turbulent first 6 months, and we'll possibly see the market head up again leading into the election period at the end of the year, while investors finally figure out the markets are okay, and they've been okay for this entire period while those interest rates were at that price. The thing that wasn't met by the market was the possibility of interest rate cuts according to this particular time frame that they are expecting the cuts to happen. If the narratives don't go to plan, what the masses are expecting, that could have some turbulence in the market, which could lead to the pullback from this disbelief stage. And that could happen across the board. Maybe Bitcoin, maybe some cryptos, as we've already seen, many of them are down at least 30%, some even more. And yes, there are the few that are doing pretty damn well. But let's look at traditional finance right now, looking at the S&P 500 during this period of a possible turbulent 6 months. Let's see how these interest rates pan out. We've got plenty of other fundamental pieces of news to get through in future videos and as they come up. But nonetheless, this is where we are with the S&P 500. So we are sitting at near all-time high prices. What's happened in the last couple of Bitcoin cycles and at these periods? You got the election coming up, you got the Bitcoin halving. So just looking at some timing here, during these periods, the market has been relatively turbulent. Although early on it was still setting new all-time high prices, it continued to have pullbacks into that previous top here, which was December 2013. Now, you might remember that the top for that previous cycle of Bitcoin was roughly November, December of 2013. And since that point, well, the S&P didn't really go anywhere until the halving, until the election, and then you get this nice big pump, especially on the S&P and the NASDAQ and so on, from that election point into another final peak here, which happened to peak at basically the same time that Bitcoin and cryptos peaked. Bitcoin in December 2017, Ethereum also peaked roughly then, and also January 2018, along with some other altcoins. And then, well, the S&P didn't really go anywhere, had a couple of corrections. We had the pandemic, Bitcoin halving, election came, market went ballistic. Now, can it happen exactly the same? Let's wait and see. But it's something to really keep in mind, considering we are in that year now where we could see some turbulency. We've got a couple of reasons why that we could see some turbulency as well, if you wanted to have a reason why as opposed to just following the chart. But yeah, we can start to see that happen in this year. The halving coming up, not that that affects the traditional finance, but I've just got that in here as timing for us as BTC investors and traders. And then we've got the election coming up later in the year. And then I think from that point, the market can go a little bit crazy, if not beforehand. So this is what I think happens next. I think right now the insiders have been selling to the masses. We've seen Bitcoin rise for 4 straight months. We've seen that big pullback, and we want to look at how that has developed in a short-term time frame for BTC on the 4-hour chart with the Wyckoff distribution in just a moment. So if we're looking at BTC, a recap of the previous peaks on a macro scale here, 35 months top to the breakout. Maybe we see another 35 months from the top to the breakout. If we do, that'll take us to roughly October of 2024. We know the election's in November, and so that could be another big catalyst for the market to start its pump from there and break out into new all-time highs. Previous cycle, again, we had 38 months before it hit a new fresh all-time high, and it happened roughly around the election. You see the election here was in November 2016. That started to break out of the previous top, take out all those monthly swing tops, and then it was able to go on its nice big run. So maybe it happened slightly earlier this time, as we saw in the previous cycle, pretty much dead on timing there. The cycle before that was a little later, so it seems like it's getting just that little bit earlier with each cycle leading into that election period. Regular viewers probably understand this chart by now, but if you are new to the channel, make sure you hit that like and subscribe button. This particular chart has helped us find the next moves for BTC in each previous cycle. And so far, this cycle is not any different to the previous ones, even though we've had some unprecedented news like the ETF catalyst. Now, where we sit is the first test of the 50% level. So we're at $42,200. And as we'll see on the weekly chart, we just closed underneath that level. So Bitcoin is having some struggles at this level. It doesn't mean that we have to have a major correction. And you probably know by now, I'm not looking for any of these sort of ridiculous major corrections. Even some of those ridiculous massive bears have upped their level to roughly $30,000. Now, I don't even think Bitcoin is going to get back to 30 or 32K. We could just hang out at these levels and hit the mid to high 30s based on previous analysis that I've shared with you guys. So I want to get onto the Wyckoff stuff as well. Essentially, just an update for you guys that have been following and all the new guys as well. We're looking at a second hit of the 50% level after a pause or correction. And from that point, Bitcoin typically goes on a mega stellar run from there. Happened last cycle, happened cycle before that. The second hit, when is that? Because I'm trying to share with you what happens next after this point. Essentially, that was around the election. Next time, a couple of months before the election, it hit it again, but the breakout was pretty much a month before the election in October, and then that new all-time high was in the same month as the election. You can see it happen again in the previous cycle. You had the halving here, the breakout, and then basically your election happened right around there, November of 2016. So that is a look at what I think is coming up over that period. How many months away are we? Roughly 22 months is what it's taken to go from the low to the breakout. We are about 8 months away from that point. Call it 7.5 because we're halfway through January. So about that sort of 8-ish or so months until we really start to see that mania come in. I would want to be completely positioned before that mania comes in for the macro cryptos and the macro portfolio that you have. Now for BTC on the short term and the Wyckoff distribution and the insiders selling in amongst all of that damn ETF hype, all of those folks that promised us God candles, all the massive thumbnails of $200,000 Bitcoin, or the biggest pump week you've ever seen in your life, they fucked you. They absolutely fucked you. And if it was me and what I do, I get rid of any of that sort of analysis. That's just my own pro tip. If you prefer them for your entertainment, because I'm not that entertaining, I get it. But if I want to really make some solid money from the markets, I get rid of that ridiculous noise about these idiots that are hyping shit up when it is absolutely uncalled for. It's not based on anything, and they don't look at the charts. All right, my little rant out of the way. Hopefully that helps you guys as well. Helps you unfollow the friggin' noise and focus on what's going on here. Looking at the pullback, roughly 15.5% from the top to the low and 15.1% to the weekly closing price. Now, this is the biggest pullback that Bitcoin has seen since that bottom roughly 122 days ago. I suspect we may have more to come, but I don't think it's going to be anything overly crazy. Now, if I look to the bottom end of this scale, so we can actually see the number, it's roughly about 17% to that next low, and to the low altogether here, the final one here at $40,000 is 18%. And so that kind of lines up with where we've been sitting through each of the corrections all the way up. You can see we had 22.5, 20, and 22 as well through these pretty big times in the market. If we're to go down to the 50% level, that takes us to $37,000. That's about 24.5%. So it's not really out of the ordinary for Bitcoin to do 24%. We've seen 22 already, and we've seen this massive big run to the upside. This is our longest run to the upside in time, the longest run. So we could expect some reasonable downside to come back to these previous levels, sitting at roughly mid to high $30,000. So let's keep an eye on these lows first at 40 and then to that area of the mid 30s. Now to the Wyckoff distribution, the big update here that I promised you from last week and what's going on in these markets. This was the accumulation that we absolutely nailed. Sorry to bang on about that and tooting our own horn, but we nailed this one. In amongst the majority looking for a collapse here, for the market to continue going down, they were waiting for a collapse there, and they were waiting for a collapse there. None of that worked out, and they got all of that wrong, waiting on the sidelines. I don't want that to happen to you guys. Learn Wyckoff, learn GAN, go to TI Premium, do it yourself online, whatever you want to do, but just learn how to do this and don't follow the masses who keep getting this absolutely wrong. So that's the macro look here, which is why I think we are not about to break down and take out this area. This was the macro accumulation that I suspect will hold up the market throughout this possible correction or pause in the market here. Which brings us to the short term. Here is the short term. We first started looking at it back here roughly on the 3rd, 4th of January before that collapse into a sign of weakness. Then we had the run up and we saw another up thrust or up thrust after distribution. And we had a very strong narrative leading Bitcoin into that pump, which was, of course, the ETF. Probably the biggest thing that could have ever happened in Bitcoin's history to this date. And what do we get from that? We got one little final move to 49,000, followed by a 15% decline to $40,500. I suspect, although I can't confirm yet, and I'll tell you why in just a moment, I suspect this is going to be the UTAD, the up thrust after distribution. You can see we've got a little bit more volume here. This is potentially a sign of weakness, and I had these written in here from last week's videos. And last point of supply. I haven't seen the market come back and test any sort of last points of supply yet. We could just get a continued breakdown, which would mean this would come down here to a last point of supply. But we'll continue to have a look to the upside and see if it can get back to 44 or some of these lows back here at roughly $45,500. So even if it is to bounce from this point, you would need to see Bitcoin get back above those previous tops there, roughly 47,500, consolidate and push again. So that's the case for the bulls in the short term. If you've been buying these lows and you're just hoping for that next run up, that's what you need to see. Closes above 47.5 to break out to the upside. If you don't get that and you get resistance at these levels here, any of those lows, any of those previous tops, you probably expect the market to fall down again, which would mean that would be your last points of supply up here. That just means that all the supply is coming in, sellers are outdoing the buyers, the demand, therefore market goes down. Now in terms of phases of the Wyckoff schematic, it looks like this was phase A, it looks like we've gone through phase B and potentially phase C, and we could be getting into phase D after we confirm that we're in phase D. So what does that look like? Well, let's turn our attention to the meanings of the phases over here. We go down to phase D. Phase D arrives after the tests in phase C show us the last gasps of demand, and you can really feel that now. Think back to last week and you feel that last gasp of ETF hype. The tossers on YouTube calling for the biggest pump of all time week that you would ever see. The idiots talking about 200K Bitcoins, those fools going on about God candles. I get a little bit triggered at that because it just calls things out time and time again, and people get screwed time and time again listening to this jargon. And I know people get pissed off about it, getting fooled into that BS online, because I see it in the comments. They say, I wish I found your channel or someone else's channel who does really great analysis as well. I wish I found this sooner. I wish I found it previous cycle. I wish I found it years ago. And I was like that when I started. I wish I found Gann analysis. I wish I'd found Wyckoff analysis. I wish I'd found the 18.6 year cycle when I first started investing, and it would have fast tracked me so much sooner. But here we are. So we can only do the best with what we have in the moment, and hopefully this is making your life so much easier. So over to the Wyckoff schematic, hopefully being able to clear out that noise, get rid of the shit, and focus on the job at hand here. That's phase D, the last gasp, ETF, all that nonsense. During phase D, price travels to or through trading range support. And so this is why we haven't been able to confirm it yet. So short term, I think we've got trading range support here at about roughly 41,500, and the sign of weakness in phase B, which is back at $40,000. So if we see that break down from 41,000, 41.5, then I suspect we'll come back and test 40,000, which then means we break down, and that's a confirmation of phase D. So in the meantime, it could continue to hold up and it could pump higher. That's all possible. But what you want to see for at least the short-term correction is those two things there, the breakdown of those trading ranges. I gave you the numbers, watch those levels. The evidence that supply is clearly dominant increases either with a clear break of support or with a decline below the midpoint of the trading range after the upthrust or upthrust after distribution. So the midpoint, think about those midpoints. That's what Gann talked about, the 50% levels. Well, it's broken down past the midpoint. So you could probably say that we are in phase D. I just like that extra bit of confirmation, but according to the rules, it's probably likely we are in phase D of this intermediate top here, this local top for this period on BTC, because the 50% was at 44.6. Now remember, Wyckoff followed Gann around in the early 1900s and wrote a piece on Gann in 1909 with how accurate Gann was. So maybe Wyckoff brought in the 50% level to his trading because he saw how fantastic it was for Gann's trading. So to finish this off here, there are often multiple weak rallies within phase D, often multiple weak rallies. Maybe we see it come up to these levels as we've already covered. These last points of supply represent excellent opportunities to initiate or add to profitable short positions. So if you are wanting to learn how to trade, go and check out the links in the top of the video description. TI Premium is right there. You can get on board and learn how to set up your accounts and learn how to fix up your plans if you are needing that right now. And anyone still in a long position during phase D is asking for trouble. That potentially means on leverage trading, not necessarily spot trading, because at the end of the day, spot and leverage are two different things. So if you are looking to long it all the time into those levels, maybe you're asking for trouble at this stage. Thanks again, guys. More updates coming your way. This is what I think happens next after, well, it seems like the insiders are selling their cryptocurrency, as you can see here from the charts and everything I've given you. Heaps to get through. Don't go anywhere. See you at the next video. Until then, take care and peace out.